Our next lecture is on marine insurance. When we talk about marine insurance, we are referring to cover provided to the vessel itself, and that would include pleasure craft insurance policies and hull policies, the goods being carried, and that would refer to marine cargo insurance, and the corresponding claims, particularly marine insurance liability claims. Of particular importance is the Marine Insurance Act. Not only is this act important for marine insurance practice, but also for insurance practice in general. This is because the Marine Insurance Act defines various insurance principles on which most practices today are based. Of course, one would expect to find various marine terms and definitions in this very important act. Let us look at some of these definitions. When we talk about the craft or the vessel, we are including the hull itself together with the machinery, motors, and other equipment. When we talk about personal effects, we are referring to general items used in connection with the vessel, particularly equipment and instruments which are kept and used on board, as opposed to special equipment, which is generally equipment added on to the vessel and removed when not in use. The in-commission period is that time during which the vessel is in use, as opposed to the laid-up period, which is the period of time during which the vessel is considered to be out of use. A total loss is one where the vessel itself is wholly destroyed, or when it is beyond economic repair. That is, it would be too expensive to repair the damaged vessel. Salvage charges are those expenses that are incurred in connection with minimizing the loss. Like, for example, when a damaged vessel is in the process of being recovered. The navigational limits refer to the area within which the vessel may be used, and the jurisdiction refers to the courts and the law that will be used in case of a dispute. Generally, most pleasure craft insurance policies are on all risks basis. There will be also a section covering liabilities, which would include death, bodily injury, or property damage to third parties. Here are some exclusions that are typically found in a pleasure craft policy. Some of these are directly applicable to the vessel itself, and others are applicable to the liability aspects. These are some extensions that may be bought by a policyholder in addition to the standard cover. When we talk about hull insurance policies, the applicable cover is derived from the Institute hull clauses. Typically, these are a set of perils that will be the basis of the cover. This slide is an extract of a typical hull clause displaying the respective perils. Should any of these perils occur and bring about loss or damage to the subject matter insured, then cover will apply. In marine cargo, cover is derived from the Institute cargo clauses, namely cargo clauses A, cargo clauses B, and cargo clauses C. Cargo clauses A are the widest, usually known as all risks, as opposed to clauses B and C, which are peril-based, clauses C being the most restrictive. When a buyer and a seller contract, they base their agreement on what are known as Incoterms. These will establish the responsibility of the goods being traded. For example, if a contract is based on X works, this means that the buyer will become responsible for the goods as soon as they leave the warehouse of the seller. If, for example, the contract is an FOB, free on board, this would mean that the seller is responsible for the goods up to the point of loading these on the vessel. Therefrom, the buyer will become responsible for such goods. Marine claims. There are two types of losses: total loss and partial loss. When we talk about total loss, we are talking either on actual total loss when the ship is completely destroyed, or constructive total loss when the ship is damaged and it is too expensive to recover or repair. In partial loss, we have a claim of a vessel or its goods being partially damaged, in which case repair is the usual option. However, in general average, when the vessel is in distress, cargo is jettisoned into the sea. The loss of such cargo is then shared among all the owners of the other goods. Therefore, an insurer may be involved in the settlement of general average, even if the goods being insured were not the ones jettisoned. As you would expect, an insurer is interested in reducing the extent of a claim. This it does by way of recovery. The insurer may become the owner of salvage if the vessel is abandoned, or under the doctrine of subrogation, the insurer has a right to sue a third party to make a recovery for the losses being paid for. When a loss is discovered, the insured must advise the insurer or broker that is involved. Usually, a professional adjuster is appointed to survey the loss. As in other property policies, the burden of proof lies with the insured, and the loss must be one caused by an insured peril for it to be covered. Any expenses to try to recover the loss, commonly referred to sue and labor, are also part of the cover. These are typical documents that will be requested by a marine claims officer, namely records, reports, certificates, and estimates.